And that's the key. It's not like this is some special event. It's happened over and over throughout human history. We're just watching it happen in front of us again. And history tells us what's going to happen. Every currency in human history has eventually been debased down into nothing. Then there's some type of a reset, a new currency, something happens to reestablish that credibility. I think we're in that trend now, not just for the dollar, but all the currencies out there in the world today, because there's just too much money, too much currency rather being created to get out of every crisis that's come along.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome to the Money Level Show. This is your host, Daryl Thomas, and here we think, act, and prosper. We focus on changing trajectories and building legacies. Today, we have the pleasure of speaking with Brien Lundin, who is the CEO of Jefferson Financial. He is also the editor and publisher of Gold Newsletter. Every year, him and his team puts on the New Orleans Investment Conference, and this year they're going to have Peter Schiff, George Gammon, Rick Rule, and many others. You can click the link in the description below so that you can check out this conference via live stream, or you could be there live in person where I will likely be at. Today, we talked to Brien about where markets are headed, what is the Federal Reserve going to do, what is his take on inflation, and should we be worried about the BRICS and de-dollarization? So without further ado, let's listen to the interview. Hey, Brien, how's it going today?
It's going great, Daryl. Great to talk with you after we met just recently at Rick's conference, but great to see you virtually here and excited to talk to you about the markets.
Yes, indeed. So I've been telling the audience about you. I've been promoting the New Orleans Investment Conference coming up, and I'm sure we'll talk more about that soon, but you all have some heavy hitters coming.
Yeah, we do. You know, I tell people that what's going on now in the world today is anything but normal. And, you know, we see the people talking, the talking heads on CNBC and the nightly news talking about the Federal Reserve policy and everything that's going on financially in the world like it's a normal thing. And it's not. None of this stuff is normal. It is stuff that would, if you'd have predicted it before, say, 2008, that we would have had zero interest rates and, you know, money handed out to Wall Street initially, then handed out to everybody in the world. They would have just hauled you off and put a tinfoil hat on your head and put you in a loony bin if you would have predicted any of this stuff. But it's all happened, and now they're acting like it's normal. So it isn't. And, you know, we're seeing things happen today that are portending and predicting other things along this trend. And people just need to be prepared for it. And right now, there's a lot of people out there at conferences, but on like financial Twitter and the like, or X as it is now called now, yeah. That are really just remarkable thinkers. And I'm a big believer that extraordinary times bring out extraordinary people. And if I have one talent in the world today, it's being able to appreciate talent in other people who are the real deal and who really has insights that should be shared. And I found just about everybody that I think is tops out there today, right now, and gotten them to this year's conference. I really think it borders on and may well be the best lineup of speakers that have ever been presented at any investment event.
Wow. Yeah, I'm definitely looking forward to it. And so you all, the links in the description to check out the New Orleans Investment Conference. We'll talk more about it later. But Brien, so I recently was watching some of your interviews. I started reading some of your letters to the audience on Gold Newsletter.
Yeah.
And so we have a few things to get into about the BRICS and such, but I wanted to start on what are charts telling you, and where do you think gold and resources are headed at this point?
Yeah, you know, As you know, at Rick's event a week or so ago, I was a big believer that gold had bottomed for the summer, and we were actually starting to see a new rally, and that not only gold, but all of the markets were starting to price in the fact that this interest rate cycle has peaked. We may have another quarter point to the upside, but it really has peaked. And what's the next big event? That's going to be the downside of the interest rate cycle. So they're starting to look ahead and price that in. Since then, however, since I opened up my big fat mouth and made that prediction, gold has weakened a bit and seems like it's going to test 1900 again. That has proven to be, a pretty strong resistance. It bounced hard off of that in July. So I continue to believe that this fall is going to be really good for the metals, and that the markets are going to face that fact again, that, the next big thing is going to be the downside of the cycle, and they're going to start pricing that in.
Yeah. And, here on my show, like I try to target the average person that may not have any gold at all. Right.
Yeah.
And so, what's your perspective? Because even just reading some of your writings, you talk about the importance of owning gold. And, even at the symposium, we talked about gold being insurance, but then there's also another aspect of where you can speculate and invest in gold for massive returns in the future.
Yeah, there's actually two reasons to buy gold. The two I's, investment and insurance. And I tell anybody who's new to the sector, well, first off, educate yourself about it. But the first real actionable step you need to take is to build up a physical metals holding of some sort, gold and silver. And it isn't insurance. It's not like, say, you buy home insurance, but you don't really expect your home to catch on fire, but it might. So you buy home insurance. When you buy gold, you're insuring something, not against something that might happen. You're insuring against something is going to happen. That being, the dollar is going to lose its purchasing power. That's been an irresistible, constant trend for decades, and it's going to continue. That, say, 3 years down the road, 3 or 5 years down the road, the dollar is going to be buying a lot less than it is today. You don't know how much less, but it's going to happen. And generally speaking, over, a lot of years, broad, long periods of time, gold holds up its purchasing power better than gold. It actually holds it up, and the dollar doesn't, and if you price things today, saying the number of ounces of gold it would take to buy something, you would see that the cost of an Ivy League education is the same price, the same cost today as it was in the 1930s if you priced it in gold. The same number of gold ounces buys both. If you price, say, the Dow in gold, you see that it hasn't really moved for 60 years, that all of its gains have been really because the dollar is worth less. And it goes on and on. Everything out there that if you price it in gold, the prices remain stable. If you price it in dollars, it has gotten more and more expensive, takes more and more dollars because the dollar has gotten cheaper and cheaper. So that's what you're insuring against. Now, and that's why it's important to hold gold and silver too, because silver performs similarly and typically outperforms gold. It's important to have the physical metals. But when you look at the larger economic picture and you see things like the size of the debt that the U.S. has today, and the cost of servicing, paying the interest on that debt. When you look at the spending of the federal government, when you look at the fact that there will be another financial crisis, and when that happens, the Fed and the U.S. government is going to have to do everything it did before, but much, much more. You can see that these trends mean that the dollar will get considerably cheaper in the very near future. And in those kinds of situations, you can invest in gold to try and leverage, try and make more money off of those trends. And there are a lot of ways to do that, not just in buying the metals or buying the ETFs or buying mining stocks and the like, things that outperform or perform a multiple of what happens in the gold price. So those are the two reasons: insurance and investing. To not just investing, you're not just preserving your wealth, you're trying to make more.
Yeah. And the scary thought, that I talk with my audience about is that, obviously the dollar has lost over 90% of its value since its inception.
Yeah.
And right now, like the dollar, what is the dollar backed by? So Nixon took it off the gold standard. It was the petrodollar with the Saudi Arabian agreement. And now, that relationship isn't looking really good. So what is the dollar even backed by right now?
It's backed by full faith and credit by the promises of the government. But those, every government does that. And we can pick on the dollar, but the dollar is a fiat currency. It's a currency that's not backed by anything solid. Every other currency in the world is in the same boat. Every currency in history, even when they were backed by gold, they would still devalue the currency by, when they were making gold coins in ancient Rome, gold and silver coins, they would take gold and silver out of the coinage, more and more gold and silver out of the coinage. So they would debase the currency even back then. This is something that governments do. It's something that humans do. They end up spending too much and they end up having to cheapen the currency to pay for all of that stuff. So it's not unusual. And that's the key. It's not like this is some special event. It's happened over and over throughout human history. We're just watching it happen in front of us again. And history tells us what's going to happen. Every currency in human history has eventually been debased down into nothing. Then there's some type of a reset, a new currency, something happens to reestablish that credibility. I think we're in that trend now, not just for the dollar, but all the currencies out there in the world today, because there's just too much currency rather being created to get out of every crisis that's come along. And these crises are coming on more quickly now, and every time they have to do more to get the same kind of effect in the economies. So yeah, we are in an irresistible trend toward cheaper and cheaper currencies, and the winner at the end of it all will be gold.
Mm-hmm. Yeah, and earlier you mentioned silver. I do have some silver bugs on my channel. Currently, I think the ratio gold to silver is in the 80s.
Yeah.
And silver has a lot of potential to move upside. And I do hear different competing narratives regarding silver being industrial and versus monetary. What's your view on silver, and where do you think the ratio could, potentially head, for a potential massive gain in that?
Yeah, silver is an interesting story. It has always, whenever there's been a long-standing bull market in gold, silver has always outperformed gold. And that's because these long bull markets in gold have been based on monetary issues, fears of currencies really rapidly losing their purchasing power. And silver has a monetary use. Historically, it's been used as money, so it benefits from that. But it's much cheaper than gold, so it tends to move up much more quickly on a percentage basis during those periods. And importantly, when the gold price is falling, it also outperforms on the downside and loses more. So it is riskier. But that's why it kind of excites investors and savers in gold and silver. That's why it excites them, because it has a bit more torque, a bit more juice, and rises more quickly and is a lot more active than gold. I think that ratio will probably get, because I envision us having a big, strong bull market in gold based on these monetary issues. I think the gold-silver ratio will probably get into the 30s during this period, so silver will dramatically outperform. I'm not a big believer in the status of silver as an industrial metal. being something that would help it. I think it's really valued, almost completely valued on its monetary usage and its monetary history. I don't think the industrial usage has a big effect on silver, at least right now. There is potential that solar usage will take a lot of silver production out of the global supplies. The one reason why I don't think people should own silver exclusively is because this trend I was just talking about will at some point have a reset where, to reestablish credibility for these currencies, they're going to have to connect it to something that forces governments to be more careful of how they devalue. And that one thing is gold. And I'm not sure that they are going to, when they do that, that they're going to, at least initially, include silver. So it is important, in my view, to have, the king of all metals, the king of money, gold, but also have a good proportion in silver to get that extra torque and outperformance that I think will come.
Yeah. Thanks for sharing that. That's very enlightening. So currently we have the CPI inflation coming out, and that's if people believe the government's numbers. Obviously, Shadow Stats has a different view on that. And so what are you expecting for inflation? I mean, because I see that the price of oil has been trending upward. I think today natural gas is up as well. So it seems like commodities are getting a bid here, and the Fed can't print natural resources and such. And so where do you see inflation going? Hello, everyone. Sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brien Lundin and his team. Brien is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
Yeah, I think we'll probably get another decline in the inflation rate. I think all of the comps and also, energy prices rising and some commodity issues, we're going to see more upward pressure on the CPI after this report. But we'll see. I think long term, the inflation rate will probably settle in the 3 to 4%, considerably above the Fed's 2% goal. I don't think they're going to be able to get it down to 2% for any meaningful period of time. We still have wage inflation that hasn't really hit the numbers yet. So the Fed is going to have to stop raising rates, and eventually will be forced to cut rates really without getting inflation down to its 2% goal, in my view. And I think the markets are going to look at that as a really big failure, and a reason, frankly, to own gold and silver. Yeah.
And we're also like experiencing I've done some, research on just the amount of fiscal deficits, and many of the people I brought on, I've explicitly shared, like, I don't think Social Security is going to be there when when I get that age. No. And so, retirement and pensions is a big issue as well that I think not many people are aware of, that is coming down the line. I mean, many people don't have enough in their retirement accounts to even think about retiring. So there's these products out there as far as like gold and silver and in retirement accounts and such like that. Like what kind of role do you think that plays in where we're headed?
Well, I think that there's again, it gets back to the fact that with all that debt, the currency, the dollar, has to be devalued over time, and there is a possibility even of a default at some point. You look at all the liabilities, you're over $100 trillion. You look at the federal debt alone, and it's now at 32.6 trillion. I did a speech in April. I mentioned at Rick's event, I did a speech in April, and I noted in my speech that the federal debt at that point was 31.6 trillion. That means we added in 3 months' time, we added another $1 trillion to the federal debt. We're probably going to run a deficit this year between 2 and 3 trillion. We're already at 1.7. And then on top of that, we're going to add about $1 trillion in interest on the federal debt. So this is really getting crazy now. And again, this means that we'll be able to pay Social Security most likely, but in what? Not the dollar that we have today. We'll be paying your Social Security in tomorrow's dollars, and they're going to be worth a whole lot less. So yeah, you need to protect yourself and insure against that with gold and silver. If you're looking at getting gold and silver in retirement accounts, there are some, frankly, scams out there involved in that, where they're selling, U.S. Mint bullion or no, proof bullion coins to put into retirement accounts. And these are not valued. They're valuing them at the price that the mint is selling them at. But in the aftermarket, they're really worth much less. So you need to steer clear of a lot of those programs and find reputable coin dealers and trustees that can put gold and silver into an IRA, for example. But you need to do common bullion coins, really low markup bullion coins that are only priced, a couple percentage points above their melt value or thereabouts, and not these proof coins. So there's a lot to be careful of if you're trying to get gold and silver in your retirement accounts.
Mm-hmm. Yeah, that's good to know. So just from reading your letter to the Gold Newsletter subscribers, I believe it was on August 7th. You mentioned the hype around the BRICS, and so I just want to read a little bit of that for the audience, and then just unpack that a little more. So you wrote that before the gold BRICS, quote unquote gold BRICS, the new Basel III banking regulations were the latest, greatest thing for gold bugs to hang their hopes onto, but it turned out to be a dud. Another good reason for skepticism is the simple bureaucratic inertia that would need to be overcome to accomplish it, especially as soon as the upcoming BRICS summit being held from August 22nd to the 24th. In fact, South African officials involved in organizing the summit have clearly stated that a BRICS currency, gold-backed or not, simply isn't on the agenda. So it appears that gold bugs hopes for a magical springboard to much higher gold prices will once again be proven in vain. And so we know that, like, a lot of the mainstream financial media, and there's a lot of titles out there about, like in fear mongering and such like that. It seems like you have a level head about what's going to come out at the BRICS summit. For me personally, I think that human beings have a hard time working together on a lot of things, especially when you're bringing together like multiple countries, even though they've been at this for, I think, 17 years or something. But so what is your take for gold investors right now? What are you encouraging people to consider while these stories are coming out?
Yeah, I've been involved in the gold market for the better part of 4 decades, and I've seen a lot of things come and go. So I like to warn people when these sort of hopes get raised, if there's some kind of a Hail Mary that's going to come out and immediately catapult the gold price. I've seen it happen over and over again. And I do think that if the BRICS countries want to establish a trade currency, the only way it would work is if they attach it to gold in some way. I just am very skeptical that it's going to happen anytime soon, or even that they'll do it, because it does limit them somewhat. it's also a pretty motley crew that's trying to do it when you consider that Putin can't even go to the BRICS conference in South Africa because there just happens to be an arrest warrant for him in South Africa. So not a lot of momentum. I mean, all this, whatever they're going to do, they've done it and agreed to it really before the conference even started. So yeah, I think that there is the chance that there could be a competing trade currency to the dollar because these currencies in a lot of other countries are kind of taken aback by the fact that the U.S. has control over them because of their ability to institute sanctions and everything else. And the only way that could happen would be by attaching it to gold somehow. Again, I don't think it's in the near future, and we'll get some good signs if it is coming up. The real reason to buy gold is not these sort of potential geopolitical agreements or anything like that. Again, it's this ever-present, irresistible, relentless trend of the dollar and other fiat currencies losing their purchasing power, a trend that seems about to really accelerate in the weeks and months just ahead. So that's the reason to own gold. You don't really need any more reason than that.
Mm-hmm. Yeah. And I think that sometimes, like even thinking of like just how long it takes for, the fiat currencies to fail, or even for the dollar to go away or de-dollarization to happen. It seems like there's so many trade-offs that has to be assessed, so many mechanics, that have to be looked at the current system. And it seems like it's going to be a longer process for this to take place. I just don't see it. Me personally, I just don't see it happening overnight. I mean, anything is possible, but I just don't see that.
Yeah, well, consider that we're seeing a lot of things happening today that really parallel what happened in ancient Rome and the fall of Rome. We see that over the last 60 years, the dollar has lost 90% of its purchasing power. You can look in history and look at the Roman denarius and see, well, over a similar period of time, the denarius lost 90% of its purchasing power. Well, then it lost another 90% and another 90% over similar time periods. So it takes a while. When Cicero in ancient Rome first started saying, hey, things are going to hell in a handbasket, we got to stop spending all this money, we got to balance the budget, et cetera, they were about 200 years away from the total collapse and the barbarians taking over Rome. So it takes a while. But still in all, over any of those, over that long time period, you would have been a lot better off than your fellow Roman citizens if you had socked away a lot of silver and gold in pure form and saved it over that time period, because the currency of the day was rapidly losing its purchasing power, and you could have protected yourself from that. So that's the thing that I think people need to look to history as an example and as a lesson. It's not like the world's going to end tomorrow or the U.S. is going to collapse tomorrow. It probably will take a long period of time, but there's going to be a lot of hell in the meantime, and a lot of confusion and chaos and steady depreciation of the dollar in the meantime. And you can protect yourself against all that. You can't predict exactly what's going to happen. Nobody's smart enough to know, but you can be confident that you really need to own some gold and silver going into it as that protection, and find ways to kind of use that trend and invest in that trend to build wealth along the way.
Yeah, definitely. I would say probably my biggest geopolitical concern is, if this leads to like any type of world war or some type of proxy war or such. I mean, it kind of reminds me of like, the BRICS coming together, then you have the Western nations and all these different cliques. It reminds me of the Axis and the allies, and things of that nature. And so, I'm kind of wondering, like, okay, is that the playbook that may happen at some point? And so that's probably like one of my biggest concerns right now.
Well, it's only happened over and over again. So yeah, I think your fears are justified. And again, that there are a lot of reasons to be worried and scared and to look for ways to protect yourself. But you don't really need to look beyond the fact that, just look at how much debt there is and how quickly they're adding to it, how quickly they're creating new dollars with keystrokes on the Federal Reserve's computer. That alone is enough reason to buy the metals. But yeah, you're totally justified. Anything can happen, and probably will.
Yeah, definitely. Well, Brien, could you share more about the New Orleans Investment Conference coming up?
Yeah, absolutely. I know you're going to have a link with the show notes and the like, and that's where people can register. But we have, again, I handpicked all of our speakers, and I think they're the best in the world today. We're going to have Matt Taibbi, who's the guy that really exposed the Twitter files and all the censorship of social media during COVID, and a lot of other things that have been happening by the government to try and restrict your access to information. We have James Rickards, we have Danielle DiMartino Booth, George Gammon. I have Konstantin Kizin, I just signed up, who's fantastic. A lot of people don't know who he is, but he's one of the leading thinkers and humorists really out there commenting on the geopolitical scene. We have Rick Rule coming to our event. We have Dominic Frisby, Brent Johnson, Lynn Alden, who I think is the smartest person in the markets today. Dave Collin, who's always a hoot, lots of fun. Peter Bookvar, who's kind of the resident contrarian on CNBC. Really the one person I believe has his finger on the markets better than anybody else. James Stack, who is the most accurate forecaster I've seen in the 4 decades I've been involved in this business. Peter Schiff, who's always fun. Jim Urio, who also is very insightful, used to be on CNBC before he got too outspoken. Tavi Costa, brilliant analyst, and literally dozens more. I could go on and on. It is the best lineup I think we've ever had from top to bottom.
Yeah. Wow. That's amazing. So everyone that's watching this, please click the link in the description. You can be there in person, or you can watch it via live stream. However, in person, could you explain the difference? Just how I know when I was at the Rural Symposium that being in person was a total different experience.
It's unbelievable. For one thing, you're surrounded by hundreds of people who are really smart, successful investors, and you're in a kind of a destination, a resort destination, a exotic destination where everybody's there together and willing to share their views and network. And it's really an extraordinary, this sharing of information. There's an intellectual energy that you can just feel in the room. And all these speakers that you maybe follow on social media, you watch their videos, you see what they're putting on Twitter, and you get to meet them. I mean, they're walking around the halls answering your questions. We have lots of opportunities, not just from our big stage, but from round tables and speaker tables and the like, and workshops where you can hear these people. But they are there talking to attendees, and you can just bump into them in the hallways and get their views, tell them the questions that you want answered. And it's a kind of financial education and social opportunities and camaraderie, really, that you just can't get anywhere else. The conversations, as you saw at Rick's event, just bumping into people and talking with them are priceless. And you just can't get that, virtually and over your computer.
Yeah. Agreed. All right, you all be sure to click the link in the description. Brien, thank you for coming on.
Daryl, I really look forward to this. It was a great pleasure. I look forward to seeing you down here in New Orleans.
All righty.